Welcome back to Investing Talk podcast. Today, we're focusing on a company that's definitely been making some waves, especially if you're interested in the whole digital asset space. Core Scientific. We've got a whole stack of detailed information and analyses here. And while our mission today is to really break it all down for you, we want to tackle that big question. Is Core Scientific a good time to buy right now? So we're going to unpack the fundamentals, crunch the numbers, see what the experts are saying so you can walk away feeling well-informed, hopefully with some surprising insights too.
Absolutely, and we'll explore both sides, the opportunities which are there, but also the pretty significant risks involved with Core Scientific. What's really fascinating here, I think, is just how complex this one is. The opinions are all over the map. It's definitely a puzzle. We're here to try and help you put those pieces together.
Right. And before we jump in, just a quick reminder, if you find this kind of, in-depth financial analysis helpful, please remember to subscribe, like the video, leave a comment. Your support genuinely helps us keep these explorations going. And hey, if you're feeling extra generous, you could always consider buying us a coffee. The link's below. Also, super important, if there's a specific company you want us to look into next time, just drop it in the comments after this discussion wraps up. Okay, let's get right into our Core Scientific exploration.
Unpacking the fundamentals. A, look beyond the surface.
So, first things first, let's talk about Core Scientific's financial health. We should probably start with their recent Q1 2025 earnings report. Because, well, looking at it initially, it seems like a really mixed bag. Kind of confusing, actually. You see, their revenue came in at $79.5 million. Okay, but that's way down from $179.3 million the same time last year. That's a big drop. Yikes, right. But then you look further down the report, and suddenly there's this massive net income figure, $580.7 million. That's just a head-spinning jump from last year. So what's going on? How do you get that number with falling revenue?
Yeah, and that's the crucial point, the thing that can easily trip people up if they just glance at the headlines. That massive net income number. It isn't really what it looks like on the surface, not at all. The vast majority of it, $621.5 million to be exact, was what's called a non-cash mark-to-market adjustment. Think of it like owning a stock that goes way up in value. On paper, you're richer, right? But you don't actually have that cash until you sell the stock.
Okay, so it's like a paper gain.
It's exactly. Core Scientific's own stock price movement made their assets look more valuable on paper, but it wasn't cash generated from actually, mining Bitcoin or running their data centers day to day. So if you strip that non-cash item out, the picture of their actual operations looks, well, very different. Their operating loss was actually $42.6 million. That's a huge swing from the operating income they posted a year earlier.
Oh, okay.
And their adjusted EBITDA, which is often seen as a better measure of core operational profitability before things like interest and taxes, that was negative $6.1 million. Compare that to a positive $88 million last year. So yeah, this tells us the core business, the actual operations, are facing some pretty real substantial headwinds right now.
Okay, so basically, stripping away that paper gain, the core business is struggling quite a bit, even with that flashy net income number. So given that, my next thought is immediately about debt and liquidity, cash. In a sector this volatile, like crypto mining, having cash on hand is absolutely critical. Do they have enough to kind of weather these operational storms and maybe still pursue growth?
That's the key question, isn't it? And surprisingly, this is actually an area of unexpected strength for them right now. Interestingly, despite those operational issues we just talked about, Core Scientific finished the quarter with a, frankly, remarkably robust liquidity position. They reported having $778.6 million in cash equivalents, and importantly, digital assets on hand.
Oh, okay. That's quite a cushion.
It is. It provides a pretty substantial buffer, give them vital flexibility for both potential growth projects and just managing their existing debt. In a sector like this, which is super capital intensive, you constantly need money for new machines, facilities, and where revenues can swing wildly with crypto prices, having that much cash is a definite strategic plus, a real advantage.
Yeah, that is certainly reassuring, especially, like you said, given how volatile this whole industry is. So speaking of the industry, how is Core Scientific trying to position itself within this really competitive landscape? We're talking digital infrastructure, blockchain mining. Are they just kind of treading water, or are they actively trying to carve out some kind of strategic advantage?
Well, they're definitely active. They're working hard to expand their capacity and, crucially, lock in long-term contracts. That's absolutely vital for survival, let alone success in this space. A key example everyone points to is their 250 megawatt commitment to CoreWeave, CoreWeave is a big player in AI computing infrastructure.
Right, I've heard of them.
Yeah, and getting that deal locked in by year-end is significant. This kind of large-scale expansion is critical because in mining, scale and energy efficiency are pretty much everything. The more power you control efficiently, the more competitive you can be. However, and this is a big however, you always have to remember the wider ecosystem. The whole crypto mining industry itself is just inherently volatile, full stop. It faces huge regulatory question marks globally, different countries doing different things. There are macroeconomic risks like energy prices suddenly spiking. And there's always the threat that new technology makes your current mining rigs obsolete.
Right, constant upgrades needed.
Exactly. So all these factors impact everyone in the sector, including Core Scientific, making it a really challenging environment, even for companies that are aggressively expanding like they are. It's definitely a high-stakes game they're playing.
Valuation, a wide range of opinions.
Okay, so we've looked at the financials, the operational side struggling a bit, but that strong liquidity position. Now let's pivot. How does the market actually value Core Scientific? Because, for a company in such a dynamic kind of new space, the usual valuation metrics can be really tricky to apply, right?
Right.
What did our sources find about their price ratios, analyst targets, that sort of thing?
You're absolutely spot on. Trying to use traditional metrics like, say, a price-to-earnings ratio is very difficult here, mostly because of those recent operating losses we mentioned and just the sheer volatility of the sector. Earnings can swing wildly. What's really fascinating, and honestly quite telling about the uncertainty, is the huge divergence we see in analyst price targets. And we're not talking about small disagreements here. The consensus estimates seem to average somewhere around, say, $15.46 to maybe $18.69 per share. Now, the stock's currently trading around, $13.75, $13.76. So if you take those averages, it implies a potential upside of roughly 35–40%.
Right.
On the surface, yeah, that sounds pretty promising, doesn't it? Almost like, hey, here's a potential buy signal.
Yeah, 35–40% upside sounds pretty good for potential investors. But I guess my question is, how do we square that kind of optimism with the operational headwinds and the volatility you just laid out? It feels like a disconnect. Are these analysts just being overly bullish, maybe focusing too much on the CoreWeave deal, or is there something else driving those positive targets?
That's the million-dollar question, isn't it? How reliable is that implied upside when you see that some other forecasts are dramatically more negative? I mean, we're talking about projections out there that see the price dropping by over 70% in 2025. Some forecasts go as low as like 0, so a 6 on the extreme end, or maybe more realistically, down towards $7.25.
Wow, from $18 down to potentially under $1. That's a
Yeah.
huge range.
It's an enormous range. It's not just a slight disagreement among analysts. It clearly signals extreme uncertainty. There's just a profound lack of consensus in how the market should even value this company right now. It's almost like different analysts are looking at completely different businesses or focusing on entirely different factors. And those implied negative outlooks, they definitely dominate some of the more cautious forecasts. That's largely pinned on, you guessed it, the inherent industry volatility, the crazy swings in crypto prices, and those very real operational risks we already touched upon. It really tells you there's no clear, agreed-upon roadmap for this stock's future value.
Technical signals and market sentiment. Mixed messages.
Okay, so we've got the fundamentals, the liquidity picture, and this wild range of analyst valuations. But what about the charts themselves? What are the technical indicators telling us right now about Core Scientific's stock price movement? Are there any clear signals flashing either buy or sell?
Right, let's look at the technicals. Currently, the stock's trading around that $13.75 mark we mentioned. Now, that price is actually slightly above its 50-day simple moving average, which sits around $12.81, and also above its 200-day SMA, which is around $12.29. So for listeners maybe less familiar, SMAs just smooth out price data to help spot trends. Being above both, especially the longer-term 200-day, usually suggests some mild near-term bullish momentum.
Okay, a slight upward tilt.
A slight upward bias, yeah, at least for the moment. However, if we look at the relative strength index, the RSI that measures the speed and change of price moves, it's currently at 41.08. Usually below 30 is considered oversold, maybe due for a bounce, and above 70 is overbought, maybe due for a pullback. So 41 is pretty much in the middle, neutral. But it does hint at somewhat weak momentum overall. It's not like the stock is surging with buying pressure.
Right, not screaming, buy me.
Not screaming, no. And volatility is moderate, around 12.69%. Over the last month, it's had a fairly balanced number of green days. It closed higher about 15 out of 30 trading days. So kind of choppy sideways action with a slight upward lean.
Okay, so technically a bit of an upward bias maybe, but definitely not a strong runaway bullish trend, more like cautious optimism perhaps. How does that line up with the overall market sentiment and those analyst ratings we talked about? Are we seeing consistency there or more of these mixed messages?
Well, this is where it gets interesting again with these contrasts. You really have to connect the dots as an investor. Despite those operational challenges we saw in the Q1 report, you look at the analyst community, and a consensus of somewhere between 16 to 19 analysts currently have a buy rating on Core Scientific. And maybe even more telling, there are apparently zero sell or strong sell recommendations among them.
Zero. So
Or
yeah.
zero sells, according to our sources. So that paints a picture of, cautiously bullish sentiment, at least among that specific group of professional analysts, which, as you kind of hinted, seems maybe a little bit more optimistic than the fundamentals or the lukewarm technicals might suggest on their own. It implies these analysts see significant potential despite the current hurdles.
That is a powerful signal from the analysts that unified by consensus with no sells. But I feel like I remember our sources mentioning a broader market indicator, something that might paint a slightly different picture, maybe suggesting a bit more caution in the overall market compared to these specific core scientific analysts.
It's exactly right. While that analyst group focusing on Core Scientific is cautiously bullish, if you look at a broader measure like the Fear and Greed Index, which tries to capture overall market psychology, it's currently showing a level of fear. It's at 39 out of 100.
Mm-hmm.
This index blends things like stock price momentum across the market, trading in options, market volatility, stuff like that, to get a general vibe.
Okay.
And a reading of 39 definitely indicates that general investor caution is kind of the prevailing mood across the wider market right now. So this forces us to ask that important question. How much might that broader market fear hold back a stock like this, even if its analysts are optimistic?
Mm.
Especially for a speculative name. It highlights that potential disconnect, The individual company story might look okay to some, but if the overall market tide is going out, it can pull even seemingly strong boats down, or at least cap the upside.
Upcoming catalysts and major risk factors.
Okay, so every investment obviously has things that could make it go up catalysts, and maybe more importantly, things that could make it go down the risks. What should we be looking out for specifically with Core Scientific? What could impact the stock, both in the near future and over the longer term?
Good question. In the short term, I think a key potential catalyst would be the successful completion of that billable capacity delivery we talked about. Specifically, the 8 megawatts plus that additional 40 megawatts at their facility in Denton, Texas. If they hit those targets on time, it could provide a pretty tangible boost to their revenue relatively soon. It turns those contract promises into actual cash flow.
Makes sense.
Also, any upcoming earnings reports will obviously be critical. They'll give us more clarity on whether the company is actually turning the corner operationally or if those challenges are persisting or even worsening. Markets will scrutinize those reports very closely.
Okay, so completing contracts and upcoming earnings are the near-term things to watch. What about the longer-term view? What are the bigger picture catalysts that could really, move the needle for Core Scientific down the road?
Well, long term, the big story is their strategic expansion into broader digital asset infrastructure. That CoreWeave contract is a prime example. If they can successfully land more large-scale deals like that, maybe beyond just crypto mining clients, it could dramatically increase their recurring revenue streams. It could also help diversify their business model, making them less reliant solely on the ups and downs of Bitcoin price, for instance. Successfully executing on these larger infrastructure plays could fundamentally change the investment thesis. However, linking this back to the bigger picture again, those macroeconomic factors are always going to be critical drivers. Always. We're talking about the overall health and price trends of the cryptocurrency market itself that directly impacts their mining profitability. Any significant changes in regulation around crypto, either positive or negative, could have a huge impact. And energy costs, that's a massive chunk of their operational expenses. Big swings in energy prices are either powerful tailwinds or major headwinds. These external forces are largely outside their direct control, but they will likely dictate a lot of their long-term success or failure.
Right, those external factors are huge. So given all that context, what would you say are the most significant risks you highlighted for Core Scientific? Because for our listeners, it's absolutely vital they understand the potential downsides here before even thinking about investing. It really does sound like this isn't for the faint of heart.
You are absolutely right. This is definitely a high-risk play, and the crucial question for anyone considering it is, are you genuinely prepared for the kind of volatility involved in these specific risks? Okay, so stock-specific risks. First, that huge gap we discussed between their reported net income and their actual cash flow, their cash EBITDA, that signals volatile earnings quality. The reported profit isn't necessarily translating into spendable cash, which is a red flag for some investors.
Okay.
Second, their deep direct exposure to the crypto mining industry. This means they are subject to extreme price swings in Bitcoin and other cryptos, which can completely change their profitability almost overnight. Then there's the ongoing regulatory uncertainty rules could change quickly in different regions, and the constant threat of technological obsolescence. Newer, faster mining machines come out all the time, requiring huge capital investment just to stay competitive.
That treadmill of needing new hardware.
Exactly. And don't forget the high operational losses they've been reporting recently, and that reliance on those non-cash accounting gains we mentioned earlier, that creates significant earnings volatility and makes predicting future results very difficult. Then on the broader sector and macroeconomic side, potential regulatory crackdowns on crypto mining may be driven by environmental concerns about energy usage, could severely hurt their business model. New carbon taxes or energy usage regulations would increase costs dramatically. And just general market sentiment towards cryptocurrencies, if the public sours on crypto, demand for mining infrastructure could dry up fast. Now, that strong cash position they have does mitigate some company-level liquidity risk, which is good. But the stock itself has shown pretty moderate historical price volatility, meaning it jumps around a fair bit. It's definitely not a smooth, stable ride. It's a roller coaster.
Overall recommendation and practical guidance.
Okay, so we've been through the fundamentals, the valuation mess, the technicals, the sentiment, catalysts, and now those pretty significant risks. Let's try to bring it all together. For our listener who's still wondering, is Core Scientific a good time to buy now? What's the overall takeaway? What's the bottom line from our analysis? Should they consider it or stay away?
All right, the bottom line. Based on this comprehensive analysis, looking at all the pieces, Core Scientific gets a rating of 4 out of 10.
Okay, 4 out of 10. So not great.
Not great, no. Despite some of that analyst optimism we saw, and some genuinely positive infrastructure developments like the CoreWeave deal, the fundamental weaknesses are hard to ignore. We're talking about the concerning revenue trends, the negative operating income. Combine that with the inherently volatile industry risks and those wildly divergent price forecasts, and it really suggests extreme caution is warranted here. This stock is highly speculative, full stop, and frankly, it's probably better suited only for highly risk-tolerant investors, people who really understand the crypto sector inside and out, and who are comfortable with a very high degree of uncertainty and potential loss. So while yes, there's some moderate upside potential suggested by some analysts, a very large downside risk absolutely remains a significant concern. This is not a stock for your typical conservative long-term portfolio builder.
Right. So, okay, let's say someone is in that highly risk-tolerant category. They hear 4 out of 10, they understand the risks, but they're still intrigued by that potential upside. Maybe they believe in the long-term crypto story. For that person, what might be a more prudent entry range to consider? A price level that might help mitigate some of that downside risk you keep emphasizing.
Yeah, that's a fair question for the speculative investor. Given that huge range in price forecasts from, maybe $18 plus on the high end down to single digits or worse on the low end, a more prudent entry for someone comfortable with speculating would probably be somewhere near the $10 to $12 range.
Lower than where it is now.
Definitely lower than the current $13.75-ish level. Getting in closer to $10, $12 would attempt to mitigate some of that downside risk by giving you a better cushion if those negative forecasts start to play out. Current prices just seem a bit optimistic when you really factor in those negative scenarios and the underlying operational hurdles. A lower entry just offers a potentially better risk-reward profile for such a volatile asset.
Okay, that makes sense. And finally, let's talk about different approaches. What about short-term traders just looking to play the swings versus maybe a long-term investor who's willing to bet on a major turnaround? What's the practical guidance for those different styles? Because presumably they'd handle a stock like this very differently.
Absolutely. Very different approaches needed. For short-term traders, people looking to get in and out quickly. They could consider trading Core Scientific based on those technical levels we discussed, maybe playing bounces off support or breakouts. But, and this is crucial, they must be prepared for extremely high volatility and really rapid shifts. This stock can gap up or down significantly on unexpected earnings news or just a sudden big move in Bitcoin's price. So for short-term trading here, agility, quick reactions, and very strict risk management, like using stop losses religiously, are absolutely paramount.
Got it. And the long-term, folks.
Long-term investors should be extremely cautious. Really think twice or 3 times.
Only even consider this if you're deeply comfortable with the significant, maybe even existential risks in the crypto sector as a whole. And you have to truly believe in the company's ability to execute a major turnaround and successfully deliver on those large infrastructure contracts like CoreWeave. That's a big if. Long-term gains here are heavily dependent on two things: successful execution of their expansion plans and a sustained strong recovery in the broader crypto market. Both need to happen. For traders maybe looking for specific levels, a potential stop loss might be placed somewhere around $9.50 to $10. That would aim to prevent deeper losses if sentiment turns really negative fast. And for initial take profit targets, maybe look towards that analyst average upside we mentioned, which corresponds roughly to the $16–18 range. But again, manage risk tightly.
Okay, so let me try to sum this up. Core Scientific. Definitely high risk, highly speculative stock. We've got very mixed analyst views, some clear fundamental operational headwinds despite the strong cash position, and a huge dependency on the wild swings of the crypto market. It really sounds like it's more appropriate for experienced investors or active traders who can handle and maybe even thrive on extreme volatility. People who really understand this niche sector well. Probably not suitable for most conservative long-term holders looking for stable growth. Definitely not for the faint of heart, as you said, but perhaps intriguing for those with a strong stomach and a tolerance for risk.
This whole analysis really brings up a fundamental question for investors, doesn't it?
Yeah.
How do you effectively balance that lure, that potential high reward of these high growth and also high risk sectors with sound, disciplined investment principles? It's a constant tightrope walk.
Precisely. Yeah, it really boils down to truly understanding your own tolerance for risk, diversifying your sources of information like we try to do here, and committing to genuinely in-depth research, especially in sectors that move as fast and are as unpredictable as digital assets. It's about being informed, making calculated decisions, not just, chasing headlines or hype. Well, thank you for joining us for this financial exploration of Core Scientific. We really hope this analysis helps you make more informed decisions in your own investment journey. Until next time, stay curious and keep learning.